traders, Jeff with OptionBoxer.com. Wanted to make another video today and kind of show you some of the trades I've been taking, and really and truly what I'm going to show you today is kind of some new strategies I've been trying. I've been trying to broaden my horizon, so to speak. Before we get into that though, please know I am not a registered financial advisor, and this video is absolutely in no way a recommendation for you to trade any stock or option. Please make sure you're doing your own research prior to placing any trades. Trading is risky, and as you will soon see, the risk of loss is very real because most of the trades I've opened at this point are showing a loss. But if you'll notice here on the screen, it is about 11:30 at night on 8-9, which is a Friday. So I'm hoping that part of the reason some of these are showing a loss is that they've kind of sucked out some of the premium going into the weekend, and hopefully that might rebound a bit when we get started on Monday with the new trading session. So just make sure you're doing your own research and make sure you know what you're doing prior to placing any trades. I am not a registered financial advisor, so please know that before you see anything else that I'm going to show you. So the trades that I've made them on Robinhood, and if you've watched any of the videos on my channel, you'll know that I do trade on Robinhood. So more often than not, I trade on TD Ameritrade, but since my account on Robinhood is a little bit bigger at this particular point in time, I went ahead and given that I noticed some weakness in the overall market, I liquidated a lot of my stocks. Typically for Robinhood, I have my dividend paying stocks there, and they're kind of just my income train, so to speak, and I don't really mess with it all that much. But because I liquidated my positions, you know, a week or so ago, kind of anticipating, I really just got lucky, to be honest with you, but it just seemed like things were kind of hitting a little bit of a resistance zone. And so it kind of worked out because we did have a little bit of a sell-off in the market the last few days. And again, today you can see it did sell off. So I got kind of lucky. Anyway, with all that buying power available, I figured what the heck, I'll just throw in some options trades. You know, Robinhood doesn't show you the delta positions of the trades that you're taking, but for the most part, I'm negative delta. So if the market continues to move down, I'll probably make a little bit of money that way. But you'll notice though, as we go through this video, that the positions that I've set up are hedged positions, and so we'll get into that as we talk. This video may end up being quite lengthy, so I'll apologize in advance. But I have a number of trades set up, and I'd just like to go through them, you know, for the sake of just recording, you know, the trades, so that A, you can look at them, and B, I can look at them later on and, you know, kind of pick up on any mistakes I might have made, or you can pick up on any mistakes I might have made and possibly make it better, or, you know, that kind of deal. In any case, let's get right into it. So you'll see here, I'll pull Robinhood onto my screen. You can see here I've got a Robinhood options trade. It's a 4-leg options contract or options trade that you can see here, the different legs, and I'll kind of talk about that in just a second. But you can see at the moment, I just opened it today, maybe around lunchtime or so, and I'm already down by $5. But you can see I was up by $1, and then even after, you know, the market closes for us at well, I guess it closes at 4 p.m. Eastern time. You know, I am Central time, so the market closes for us at 3. And so I'm not sure the time difference. You know, maybe it's an hour. I don't know, hour before, behind. I'm not interested in figuring it out at this moment. But regardless, I'm down by $5. You can see all of that was just kind of leached out right at the very end. And I don't think Walmart made any crazy moves at the end. But we can take a look at that here on the charts on Thinkorswim. I just think they're a better platform. But like I said, because I had the buying power available, I just wanted to see what it would do. So let's go and take a look at 1 day, 1 minute. And you can see it did kind of sell off here at the end. And so maybe that's why we kind of lost some of our premium right towards the end of the day. But regardless, I think it's a nice trade, and we'll see how Walmart does going forward. You can see we've got earnings coming up pretty quick like, so I'd like to get out of the short position as soon as possible. But for this video, let's take a quick look. So you can see here's the profit and loss diagram of the trade that I've set up. And we'll go ahead and zoom in just a little bit so you can get a better view of it. And so basically what I did is I bought a long-term right here in January 17th of 2020. I bought, let's see, where are we at? So I sold the 135 and I bought the 125. So that right there is a bullish call spread. So I am thinking long term, maybe Walmart will continue going higher, but in the short term, aka August 16th, I sold the 112, 113 call spread. So I've got an 80% probability on that short call there, and you know, my hope is that that will expire worthless. I'll get to keep the premiums and then turn around and do this again, you know, the following week. And so that is pretty much this trade. So if this stays below 112.78, that is kind of my break even on this trade, somewhere around 112. Really, the short strike on the near term expiration vertical spread is at 112. So long as it stays below where my cursor is now, you can see in a very short period of time I could make a good deal of money if let's say it comes up to, you know, 110. Currently Walmart is at 107.28, so if it comes up to around 110, you know, I'd be showing a nice profit. Honestly, it's a bullish position, but the benefit here is, so the profit and loss diagram is going to make it seem like if price moves down here, I'm going to lose some money. Well, that is true because I had to pay for the long vertical spread. I want to say, let's take a look here. We'll just delete this. So for the long vertical spread, see, I bought that one and I sold that one. So you can see I paid 56 cents or $56 for that vertical spread, and I collected on my short vertical spread $19. So if it does go down, I'll get to keep this entire 19-cent premium so long as it stays below 112. And if it does, then I'll come back in here on August 23rd and I'll try to find something you know, close and do it again. And so it's kind of a poorer man's covered call, so to speak. You know, it didn't have quite the risk of a poor man's covered call, you know, holding this long-term in the money call option. And it also, you know, or call option, or I'm sorry, yeah, I'm getting tongue-tied. It doesn't have the risk of holding one of these, you know, $1,000 call options that are in the money with, you know, one bad day, you know, could end up losing you several $100s. And there's just not enough premium on the short-term contracts to be able to make that really seem valid. So it's kind of my way of trading a poor man's covered call, or what I'll call a poorer man's covered call. So that's my hope at this moment. Hopefully it'll stay below 112 and then I'll get to turn around and open this up. But of course, as you can see here, if at any time this thing decides to move considerably higher, even as high as 120, you'll see I'll make a nice profit for my effort, and I will of course go on. And the reason I'm able to take a nice profit is because, let's see if we got yeah, and you can see here, way up here at the top, you can see my maximum profit would be 858 if this got to, it would need to get to about 177, which I don't see this getting to 177 in the next you know, 161 days, I believe is what it was. Yeah, 161 days. But I do think, you know, possibly 120 is, I think 120 might be possible. But really, I suspect this thing may end up falling down, and that's okay, because I only paid 56 cents for that long, you know, that long-term long call option spread. And so all I'm going to do is simply come back in and sell another vertical spread and continue trying to make my money that way. And of course, if I do get a pop, I'll close the position and move on. But that's trade number one. So I'm going to pause the video and I'll set up the next trade in Robinhood, and we'll take a look and analyze it on Thinkorswim. Okay, so my next trade is going to be in Snapchat, and what I've got here is the exact same thing I had in Walmart. The only difference, and I'll just go ahead and show you here in Robinhood, that I do have. So I do have a $4 loss at the moment, but again, you can see the profit and loss diagram here. It's actually showing at 4 o'clock that I was up by $1, and then it's listed here as minus $4. So probably what that is just the market maker's bid-ask spread has been changed. You can see I've got 2 contracts of each, 2 buys and 2 sells. So I've got a long vertical spread there ending on September 20th, so a little over a month from now. I'm going to pull that back off the screen just quickly because I do have some information on the next screen that I don't want to share. And here is the second part of that trade, and you can see this is showing a huge loss, and I'll tell you why. So I put these trades on, and I made a mistake on Robinhood because I don't typically trade options. I mean, I can't say that. I do trade options on Robinhood, but not as frequently as Thinkorswim. And so I paid the price with this particular setup. It's just it's 1 sell, 1 buy. It's a short term 8-16, so ending in just about a week from today actually. And I opened this trade and I entered the long call option that we just looked at the same time. And unfortunately, this one got filled as the market made, a pretty serious move against me. And, it just, this one got filled, the other one didn't. So I unintentionally legged into this position. And so you can see I'm not looking good at the moment. My total return is minus 13. So I've lost $13 on the trade. And my average credit, you can see it's a 50-cent wide spread. So the most I could lose would be, let's see, $34. So, most I'm going to lose here is $34. So it's not a huge loss, even if I did lose everything. But if it does lose $34, keep in mind I do have the other side of this trade working in my favor. So what I've got here right now is I've got this breaching the short-term 1650 where it's Snapchat. There it is. So you can see it's at 1698 today. And so in order for me to retain all of this premium here, I need Snapchat to fall back down to below 1650, so somewhere in here. And if it does, you can see by this blue number that I would make a decent profit. It's got a 44% chance as of today, actually as of tomorrow, to actually finish in this range. And if it finishes right where it's at now, I'll have a small loss. But regardless, I've got two long-term call option contracts, and it's essentially the same position as the Walmart trade we just looked at. So if it does move higher, you can see I've got a nice profit zone there with a very tight, maximum loss. So it's a nice risk to reward trade, and you can continue setting up these short-term vertical spreads to, maybe collect some premium on this little bit longer term. But just be careful with this one. You can see it only was 14 cents to get into this trade, or 14 cents per contract. So even if I lost all of it, it's a very, very minimal maximum loss on that $28. So even if I lost every penny there, it's not bad. So maximum risk of $28 there, $34 there, so let's call it $62, I guess, if my math is right. So $62 to possibly make 130, 120, and it doesn't seem unrealistic to me to think that Snapchat might come up here in the $20 range and possibly make me 20, 30, or I'm sorry, 60, 70 bucks pretty quickly. And if I get that pop, I'll of course close the trade and move on. Just please notice that I've only selected 50-cent wide strikes for my short call option contract or call option trade, and that kind of just minimizes the risk as it is. So as far as maximum profit and maximum loss go, it's a pretty favorable trade, and certainly one you could take a look at if you were inclined to do so. But at this point, I'll pause the video and we'll look at the next one. All right, and the last trade I want to look at is eBay. And so I'll go ahead and bring the screen over again so you can see I've lost a total of $8 on this particular trade. Made 10 of that back today. Just like the last trade we looked at in Snapchat, again paid the price because I legged into this accidentally. So this right here is the credit spread that I set up. It's the exact same strategy. just selling a very short term call option spread. And so average credit was 21 cents on a 50-cent wide trade. So my maximum loss is 29. And so not a terrible risk to reward there on a fairly high probability trade. Let me pull that off the screen quickly and I'll show you the second half, the eBay debit spread. And you can see again, I'm losing money here. So I was $8, I believe, on the last one and 6 there. So I'm down by about $14. And you can see I've got two contracts for the sell side and for the buy side. Average cost of 17 cents per contract for a total of 34 cents, I believe. And we'll look at the profit and loss diagram. So I've already got it set up here with the amount that I received and the amount that I paid. And you can see I'm already behind the curve a little bit. Even if it finished here, which it has a low probability of doing so, even if it finished here, I'm not going to show a huge profit. But the real benefit to having it fall back into this area, keep in mind here, you can see the maximum loss is fairly low, unless it finishes right in here somewhere. And really and truly, that's still not terrible at $35. But of course, we are looking at near term, just considering this short contract or this short vertical spread with a nice maximum profit potential over the course of the next month or so until September the 20th. I guess the one thing I do want to say is this is set up to be a shorter term trade. Once this these two call vertical spreads get within about, let's see, 9-20, we've got 42 days. So really and truly, I'm looking to be in this position 2 weeks at most. And my hope is that over the course of that 2 weeks, I can take a couple of premiums off of this. And for instance, the 17 or the 21 cents I made on this one, I'd like to see this thing move down, and then see this. Basically what I'm saying is I'd like to collect 2 weeks to 3 weeks worth of the short call spreads, collect that premium, and then still close the long call option contract for some amount. If I can get a pop at that point and get it to a profitable state, that's great. But so long as there's some value there, I paid so little for it that if you count the vertical spreads that I'll be selling, I should still be able to get out of this trade with a small profit. So that's kind of one of the benefits to this trade. And so just wanted to kind of share it with you here. You can see I'm again behind the curve and hoping for this to move considerably higher, or even better would be if it moves just mildly lower back into the, below this 40 strike here. And then I would get to keep the entire 21 cent, keep the entire 21 cent credit. Sorry, getting tired. Getting a little bit late. Keep the entire 21 cent credit and move to sell another one. So that's it for today's trades. I'm going to go ahead and post this on my channel, or not my channel, well, on my channel and on my website. And you can find that at optionboxer.com. If you have any questions or you're curious to see how these turned out, just stay tuned, because I plan on posting the results on my website under the My Trades tab, and we'll take a look at that so that you can see what it is and where it's at. And so simply come to optionboxer.com, which is the homepage here. Feel free to check out any of the posts I've made and just click on My Trades. You can see the last trade I had went pretty well, and I've this kind of set up where you can kind of maximize it. You can see this trade was on Thinkorswim. The trades today will be on Robinhood. And then you can see here I added both the opening and closing trades, and these are live trades, so I'm not going to enter anything that isn't real. You can see on the UPS trade, I bought it for 35, but I sold it for 35, so that was a wash. I bought the Boeing trade for 24 cents, and I sold it for 45. And then GDX, I bought it for 38 and sold it for 56. So no major, insane profits there, but did take a profit on all, 2 of those trades, at least enough to make it worth my time. And then I moved on. So I typically try to trade small and keep trading as often as I can, and I think that has been demonstrated in the trades that we looked at here. So if you're interested and have any questions, feel free to reach me at optionboxer.com. Thanks for watching.